Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRNAM for Tuesday, April 18th, 2023. And our top story today, Upbeat bank earnings continue a bullish sentiment. And joining me now to discuss this and a lot more, Jane King is a financial journalist joining us from the NASDAQ this morning. Jane, great to see you this morning. Thanks so much for stopping by the program this morning.
Great to be back with you, Jeffrey.
I always appreciate your wisdom and insight, and I know you're sitting at the NASDAQ. It's always nice to see the beautiful colors of the NASDAQ. Jane, got some Upbeat earnings from U.S. banks, and it's a tale of two months. I mean, last time you were on, we were talking about Silicon Valley Bank, Signature Bank. We were talking about the world ending, and there's still a bullish sentiment in the air. I want to get your feedback on this and what you're hearing on the street, but also at the NASDAQ.
Yeah, well, you're right. I mean, JP Morgan Chase, Citigroup, Wells Fargo, all beat expectations. Now, we do hear from the regional banks coming up, and they were the ones most affected by that banking crisis. So we'll see what they have to say. And I do hear some people talking that they may have to up the yields that they're paying depositors on savings accounts and CDs and things because interest rates are up, and people are like, hey, I can get better at a money market fund or at Chase or whatever. So we may hear them say that. I'm still, what's funny about, I've been hearing talk of a recession for maybe a year now, maybe a little less than a year, and it keeps getting pushed 6 months down the road. So all of a sudden over the past couple of weeks, I've been hearing, well, maybe 2024 will have a recession.
Well,
So, I mean, look, this is well known among investors that we may be in a recession. We all know about the banking crisis, and the market still seems like it wants to go higher. So it's being very resilient.
Yeah, Jane, I mean, I'll just point out that for all the people that are the bears and they're saying we're going to be in a recession, eventually you're going to get it right. I mean, eventually, if you push it out long enough, oh yeah, that's what we were talking about. It wasn't 24 months ago or 18 months ago. Jane, I mean, through the first quarter, though, 2023 has done, if you think about it, from a performance-wise, it's done better, clawing back a lot of those losses that we saw in 2022. I mean, it was a tale of two years from 2021, 2022, but now things are seem to be coming back into fruition in terms of returns.
Yeah, they seem okay. I mean, we're not going gangbusters. I mean, unless tech is doing pretty well. And I think Facebook's up like 70% from its low, and Netflix is way up, about that much from its low, and Tesla is doing really well. But you don't often have 2 down years in a row. And we had a pretty severe down year last year. So, doesn't mean we're going to have big gains, but it probably means in the end, even with some volatility, we might be able to squeeze out a positive year this year.
Yeah, and consumer sentiment seems to be fairly positive as well. I mean, I think University of Michigan just came out with some numbers, I think for the month of March, if I'm not mistaken, maybe it was earlier than that the consumer still is happy. But Jane, they're piling on a lot of debt, credit card debt. That's probably going to help out some of these bank earnings that we're going to be hearing about.
Record high. Well, especially because they're now, I think it's 20% interest rate on credit cards, which is atrocious. That's why when people ask me like what they should do, is like, if you have credit card debt, number one, pay it off as much as you can. There's like the interest rate's crazy, and you're not really getting anything from that anymore. So that's the number one thing I tell people to do if they are able to. But there's a few little cracks. Like retail sales last month were about half what we thought they were going to be. So there's a few things here and there that seem to show maybe the consumer is under a little bit of strain, but then you'll get another report that's positive. So it's really a mixed picture right now.
Yeah, and last question before we head into the break, inflation, because that's going to dovetail in our conversation about what we might expect from the Fed. But how are we doing in terms of inflation? I've been reading that maybe food prices have started to back down a little bit. The price of eggs isn't 5 times what it was. Now it's only 4 times. But I do see gasoline prices. I was driving down Independence Boulevard here in Charlotte. Gas prices creeping back up, Jane. It's no longer $3.19. It's like $3.45 here.
Yeah. Well, and we typically do see gas prices start to creep up as we get toward Memorial Day. And then you couple that with the OPEC plus surprise production cut. And so, not a surprise that we're seeing gas prices go up, but food prices did ease last month. Rent and housing is still high. So, that's the thing that's keeping that higher. And there's just a lack of affordable housing. And there's regulations and building permits and all kinds of things that are kind of keeping that housing from being able to provide the supply that's really needed to get those housing costs down. So that's the one thing where inflation lingers, but both the consumer price and the producer price index last month came in less than expected. So definitely seeing inflation cool for 9-10 months now in a row.
Yeah, that's positive. Jane, as I said, I need to take a very quick break. When we come back, we're going to get Jane's take on actions potentially by the Fed. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Tax audits, tax liens, wage garnishments.
Every day we hear stories like this about good folks who are simply struggling to pay their bills. Each of them are living a frightening IRS tax nightmare, and they are afraid it will destroy their lives.
I'm a divorced single mom, and my ex-husband left me and the kids with a lot of unpaid bills, including unpaid taxes. I was really starting to show my stress on my kids because the IRS had sent me a letter demanding a huge payment from me. I couldn't afford it. So then the IRS was threatening to garnish my wages. I'm already living paycheck to paycheck. That would have put me over the edge financially.
It truly seemed hopeless, but then a friend at work told her to call the tax relief line.
The people at the tax relief line, they told me about something called innocent spouse relief. They worked it out so that all of the taxes from my ex are not my problem. I don't know how that works, and I don't care. All I care about is that I don't owe the IRS a dime, and they are not going to take my paycheck.
Even if it seems hopeless, you should call the number on your screen right now. There is absolutely no cost for the call or the consultation. You are under no obligation. If you are worried that the IRS could garnish your wages, seize your assets, even take your home, call us right now. The Tax Relief Line is here to help you. Now you have a knowledgeable, professional team of tax experts that are ready to negotiate with the IRS and fight for you to save you money. The Tax Relief Line's professionals have successfully negotiated thousands of cases, reducing and sometimes even eliminating the tax debt for their clients. It's very easy to get started. Simply call the number on your screen right now. You don't have to live in fear anymore. The call and the consultation are free.
Well, Jane, thanks so much for sticking with us this morning. Really appreciate you hanging around for segment number 2.
No, of course. Love to be with you, Jeffrey.
All right, so we've talked about, since we've had you on the program, we have talked about inflation. Seems to be pausing a little bit in some places, in other ways not. You mentioned housing, rental costs, et cetera. What about the Fed? I mean, are we going to see a 5% rate, interest rate, or are we going to start seeing the Fed now pause and say, all right, it worked, let's go the other direction? I mean, it's been pretty historic in terms of the rise in interest rates.
Oh my goodness. I don't think we've ever seen interest rates rise as fast as we did. I mean, how many 75 basis point hikes did we get? It's like 4 or 5 or something. So it was really historic. They do meet in early May again. And the expectation when you look at the market is a 0.25% interest rate hike, but then they'll pause after that. So we'll see. I mean, I think as long as the economy holds up, and we don't have these recessionary signs and GDP is still positive and all that, I think they might raise again in May. But if we start to see the market react really negatively, they may pause in May. So I think a lot of it's going to be determined about where we are today and where we are at the end of April.
Jane, you talked a little bit about the mortgage rates and home buying. I want to ask you about commercial lending, commercial real estate in particular. Back to work, it seems like employers have started to really kind of turn the thumb screws, I don't know how else to describe it, to get their workers back to work. But there's still, New York, Dallas, Houston, I think, was named as one of the biggest unoccupied cities. So where do we stand with bringing people back to the office and using some of that real estate that was built?
Right. Well, in San Francisco, I think,
Yep.
is the main city that those tech workers are like, we can work from home. We're just laptop people. We don't need to be in a big office. And there have been some, Twitter, I think, has reduced their square footage in San Francisco. I know New York is trying to get people back. I did see a study that 12% of people are fully remote. 60% are back at the office full time, and 28%, I believe, are doing some kind of hybrid situation. So that's where we're at right now. But employees are really protesting this come back to work and come back to the office. And I think until the labor market starts to get, really tough, that they're going to be I have a friend who runs a PR firm, all remote. And they have been able to take people from other PR firms who are forcing their workers to go back to the office, and these workers want to be remote. So they have stolen talent to come back. So it's, and I just feel for the small businesses around these cities like New York, there's restaurants and, the happy hours and things like that aren't benefiting from all the workers being back yet.
Yeah, you make a really good point. I mean, small business, I know the government has done some things with grant programs. I've been reading about the Small Business Administration offering grants and cities offering opportunities for small businesses. But by and large, they've kind of been the unsolicited, not unsolicited. They haven't really received a lot of the benefit post-COVID. I mean, the bodegas you mentioned, the restaurants, not really seeing the upside. And it's not just New York, it's Chicago, it's Charlotte. I mean, I look out when I walk outside the studio, a lot of businesses still closed, still shuttered.
Yeah, in New York too. So I feel for them. I feel like they got hit so hard during the pandemic. And then they got hit by the labor shortage, couldn't hire anybody. Nobody wanted to work. They were getting free government money. And now, they're being hurt by office workers not coming back. And, in a city like New York and even Charlotte, I mean, the rent is so high. And there's a minimum wage, and I don't know how all of them are surviving. There are empty storefronts, but there are some that are just hanging in there. So hopefully things will turn around. I think a vibrant downtown and people in the office is really important. Maybe it's not 5 days a week, but I think it should be at least 3 and preferably 4.
Yeah, I don't think we go back to where we were. Maybe in some manufacturing jobs where you need to physically do your job in connectivity with others. But I do agree. I mean, I think you lose the culture. And for those people protesting, if you don't like the job you're in because they're putting you back to work, go work somewhere else. And there seems like there's really an opportunity there. But Jane, you do lose the cultural aspects of a company. And a company is really, its mission is driven by the people, and the people have to have some level of interconnectivity. I don't know if you can replicate that online. I mean, I love talking to you, but we've never formally met. So I don't.
No,
Do I really know Jane King? Does Jane King really know Jeffrey Snyder? Well, you've seen me from the sternum up.
Well, it's funny because Zoom is a great kind of addition or a supplement to in-person work. I feel like Zoom has opened up all new business, and I think Zoom's wonderful. But I do think there's something about that spontaneity of running into people, and you chit chat before a meeting, and that's where some of the greatest ideas in business history have come from. Just spontaneity. They sketch on napkins and things like that, and you don't have that if you've got a scheduled Zoom meeting. So anyway, I do hope people come back. I think it's important for a lot of reasons.
And you find out the latest on Netflix or Disney series that you maybe missed. And hey, how was The Mandalorian last night? Do I need to watch it? Right? I mean, there's part of that. Or how are your kids doing? I mean, some of that you can do. But with more Zoom meetings, things are packed together. Jane King, always a pleasure joining us this morning from the NASDAQ. Thanks so much for joining us. And we look forward to having you back on the program again very soon.
Great to be with you.
And that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the latest curated news and lifestyle, wellness, finance, tech, so much more, all in one place. That's right, one place. Check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content, or visit our website. And of course, all of our student partners. We're back again tomorrow for another edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
But if you're tired of the same old
Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.